This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at plenty of green across the grain screen here today to start the week, we say good afternoon to DuWayne Bosse of Bolt Marketing joining us here today on Market Talk. DuWayne, good afternoon, man. How are you? Hope you had a good weekend.
Yeah, doing really well. Another weekend of watching some youth baseball, so feel like I'm dragging a little bit today, but that's right. The market was not dragging, though, was it? A lot of green on the screen today. It was nice to see.
Well, you spent the weekend out watching youth baseball. I'm sure you got a taste of that heat there in the in your neck of the woods, the Western Plains, the Western Corn Belt, and that. I don't know. That seemed to be the biggest reason, or at least I could find, behind the rally in the grain markets here to start the week, which I think surprised a lot of folks in the trade, DuWayne.
Well, I think so, because if you wanted to build on a weather premium, I guess the biggest question was, why didn't we rally last week then, right? You know, we had 6 to 10 and 8 to 14 day maps that showed hot and dry through the Midwest. Any other year that would have rallied this market last week, and instead the market was down rather sharply. You know, more focus on those outside markets, the equity markets, and fund liquidation in general. So when I saw the forecast continued hot and dry on Sunday afternoon, I really questioned which way we're going, and evidently the experts did too, because you heard some higher opening calls and you heard some lower opening calls, and the market was kind of all aboard last night to start the week, but had some nice big gains today. Especially I felt like it was led by the soybean and wheat complex, which kind of makes sense to me. The soybean market, you know, has another big month of weather in front of us here throughout August. And in wheat, I feel like that's the first market that should bottom when we find our harvest lows here as wheat harvest progresses on. And I think we're getting to that point, but we've still got about another 2 weeks of some solid seasonal tendencies for the market to go lower, especially the corn market. So I'm not ready to say, you know, the lows are in and it's time to buy. I don't think we're quite there yet. I think we're looking for a choppy trade ahead this week.
Well, and I think as well, you mentioned this to me before we went on the air, we lost a little bit off the highs of the day here at the close. So one has to wonder if that's a sign of what is to come here and some more of that choppy action. Maybe it was some profit taking. I heard some funds buying up some contracts today of pretty much everything: corn, wheat, beans, bean oil. So it was interesting to see us lose a little bit of premium here at the close as well today, DuWayne. I think that indicates your thoughts about maybe a choppy trade this week.
I think so too. I was asked earlier this morning, is this a rally off of the weather market or a rally off of the macroeconomics? And this, at that point, the stock market was up pretty good, and the stock market started to fade in the afternoon session here, and so did our market. So I kind of wonder, maybe it's more outside market influence than anything here. But I was surprised too. You know, well, even the weather is really questionable, right? Because you got the Eastern Corn Belt. I did an interview with a few different brokers in different states this morning, and the Eastern Corn Belt was all smiles. You could hear it through the phone line that, you know, we got surprising rains over the weekend. Things look much better. Then as you got over here, it's like, well, things look good, but we could sure use a shot of rain. But I mean, parts of South Dakota got a rain too. You know, thunderstorms, they're hit and miss. One guy gets it, the next guy doesn't. So it's kind of tough.
It is kind of tough. And I think about just, watching this weather forecast again, it's all going to depend. It could change on us here. I mean, yeah, we have the 6 to 10 day, the 14-day models that are saying hot and dry, and that ridge is set up. But if we get some of those ridge riding thunderstorms, we get some of those convective storms, that could pop up on us. And I've seen as well, yes, we are getting hot. We are starting to get stressed in some areas, but by no means is this forecast. It doesn't feel like it is a crop killing forecast, at least in the sense of if it doesn't last for a month. If it goes for 2 weeks and then we catch some rains, we might lose a little bit, but it doesn't feel like it's a crop killer, DuWayne.
No, it doesn't feel like 2012, right? I think that's what everyone kind of wants to know. And like today on our farm, Northeast South Dakota, we're going to get as hot as we've been all year long. We're going to be in the upper 90s and a heat index, but the wind's going to blow, and yeah, that'll dry some things out. And then tomorrow, a high of 84. I'm like, oh, well, you'd think that would bring in some rain, but it doesn't look like it. But it's not, like you said, it's not a killing crop forecast. It's not 2012. I think what we're doing every day as we move on, we probably raise the bottom end of the yield estimate, and maybe we're not going above trend line, and we're maybe lowering, we're not going to raise 187 bushel national average corn crop, but we're narrowing it in. And as we do that, the funds tend to take the weather premium out of the market. And that's what happened the last couple of weeks. And, I still got this recession talk and that out there. And, last week there was some talk maybe we'd get some exports out of the Black Sea area, but Putin had to agree to it. And right away I kind of rolled my eyes like, he's not going to agree to any of that. And there was talk of that this morning, that he's not going to agree to this terms and an agreement that Ukraine and Turkey and Russia are going to export any wheat out. So there's still a bullish story there out there too. So a lot of choppy trade, and kind of buckle up. Up 30 one day, down 30 the next could easily happen.
And I wonder as well, thinking right here in the short term on the corn side, corn pollination, we planted late in so many areas. How much are we delayed with pollination? Are we just starting it this week? Is it going to be next week? Have we already started? I think one has to wonder that question as well as we move into this week and watch the forecast, DuWayne.
Right. Yeah. According to a lot of the different brokers I talked to in different states, the Eastern Corn Belt is just starting to tassel this week. And now with the rain, they feel like, they're not going to be 100 degrees. So they feel like they're going to go into tasseling actually, or pollination, in a really good situation. Talking to Minnesota, they're about like the Dakotas. South Dakota, I drove up and down the state this weekend. A lot of tassels just starting to shoot out. So later this week, it'll be pollinating. Now, once you cross the state line and go into North Dakota, it's like half of Minnesota is the same way too. That's where the delayed planting happened, right? And that corn is well behind it and not pollinating yet. But this is exactly what that crop needs, though, is this hot weather so it can play catch up. You think, we planted a lot of corn June 8th and 9th up here, and it's like, ooh, that's really late, but it's catching up rather well. If we can get that stuff to the finish line without a frost taking some yield away, then, this hot and dry was kind of what it needed to push it along, too. So, weather is a double-edged sword. It's hard to predict. We'll have crop conditions later this afternoon, and if you're really wondering, and how is the national crop doing, tell you what, take a look at one state. Take a look at Iowa. And right now they're 80% good to excellent, or above 80%. So as a whole, as Iowa grows, so does the U.S. corn crop.
DuWayne, I think as well, we take a look at corn, look at beans, even the wheat market. We see a rally like we do today, and we question, what exactly was the real reason behind it? Will it last? But it feels like this is an opportunity, if needed, to maybe lock in some floors here and protect yourself in case we move to the downside here later this week, DuWayne.
I think so. I think for the most part, a lot of guys have sold as much as they're going to sell. It was hard for me to get guys to sell more as this market went down. I had a lot of guys this weekend ask, the market will come back, right? And that was kind of a signal to me of like, I didn't sell enough. It'll come back later, right? And I knew there was no convincing them you need to sell it here. I'm a little more bearish probably in the short term. I just feel like these funds just want to liquidate out, get a little deeper into the recession, see where we're at. And then money flow could come definitely back into this market. And I think that's what happens this winter. So you're right. If you haven't sold any and you've got a pop, or if you have old crop corn and beans left, get it gone. The basis is still very strong. And that won't happen as you get into harvest. Remember, even if it's a short crop, you're not going to run out of corn as we're harvesting.
Well, and a great point you make there, that basis has remained strong. And I had heard some last week about some producers holding on to some old crop still, some old crop corn especially, and just those gambling bushels. And with July going off the board and moving to the September contract now, we lost a good chunk of premium there, but basis has still remained strong. To me, it just seems like a no-brainer. If you got it, it's probably time to get rid of it, DuWayne.
It does to me too, because typical broker hedging even my answers to some of these tough marketing questions is, if I tell a guy to sell his last remaining old crop bushels and I'm wrong and it rallied, I bet he's got a lot of new crop he hasn't sold yet too. So it's a win-win for him to me. So no, the old crop needs to be done and gone. I think so as well.
Well, let's shift gears a little bit. Talk the wheat market a little more. You mentioned wheat earlier in the show. To me, it feels like wheat kind of tends to linger here during this key kind of U.S. row crop production time. We do have some of that harvest pressure still going, though, as you alluded to in parts of the plains states. But I look at wheat. I look at what we've taken off the market, especially pretty much all that war premium. And I look here throughout, though, still really solid numbers. Spring wheat pushing its way back higher into the mid nines on the board. KC wheat, Chicago wheat, around that 850 or higher mark for the most part. I mean, the wheat market here as well, looking still fairly solid. Like maybe not. We found a floor here, but again, I think there's a lot of questions to be answered still there.
Hey, there is. It's hard to pick the bottom, but I know that's our job. So we gave it a shot last week, and we exited hedges in wheat last week. Last Thursday afternoon or something was when we put it out there to our clients. Time to get out. So I'm maybe not bullish to we need to buy the wheat market here, but I think we need to exit shorts. And a couple of reasons why. A couple of weeks back, we saw Egypt step up and start buying some wheat. Yes, not from us, but just the fact that they felt like the price was low enough. But last week's export sales for the U.S., we had a huge export sale, I think the biggest in 10 years or something. And China was the big buyer. That's enough for me to say, I don't want to be short anymore. So disappointed in the market that day. It performed rather poorly on Thursday and then kind of a sharp bounce on Friday. So I think this market is, if it's not at the lows, it's very close. It's time to exit the shorts. And like I said, if you're combining your wheat right now, just throw it in the bin and I think forget about it for a while. You go over to that Ukraine-Russia war. To me, this is when actually we start to lose the bushels. Last year, the story fired us up and rallied us $4, right? But that was more of a story. The winter wheat had already been planted. Now you go over there, wheat's worth about $2, corn's worth about $1. The war continues on as Russia progresses slowly across the country. What incentive at that price is there to go out and plant winter wheat? So I think there's a big production loss coming in the 2023 crop. And so this may be a low, and then we go back and test those highs, $4 or $5 up from here.
Good things to consider. I think as well, I mentioned this to you before we went on the air today, just kind of this push-pull between the weather forces and the fundamentals basically in the grain markets versus the macro side. And I know you mentioned this a little bit on the show as well, but I mean, for the most part, to start this week, the macro markets, outside markets, fairly supportive. The dollar pulling back a little bit. Some of those fears maybe easing. The Fed might only do 75 basis points versus a full 100 basis points. Crude oil rallying back above $100 a barrel. So it just feels to me outside markets supportive today, but this back and forth, this push-pull, it feels like it could continue for some time here in the markets. Would you agree?
I would agree, sadly, I'm going to say, because it's hard for somebody like me to understand the macros on a day-to-day basis, if I'm just being honest. And if corn and soybeans are going to follow them on a day-to-day basis, it makes it really hard for me to predict our markets. So you then got to kind of step back and take a bigger look at it, look at your spreadsheets. If you're profitable, get some hedges on, And I understand, well, I'm not sure of my yield out there. Well, just assume a trend line and pretty good yield and then plug that into your spreadsheet. And like you said, if you haven't sold anything by now, take a look at that. It's still a good profit. So yeah, the macro thing is definitely still tied in these markets. And that's going to make it difficult on this day-to-day stuff. And I think that's what the funds, that's why they don't like our markets right now and exiting, because they're just unsure of the whole global demand picture. We also saw some import data information from China. I mean, so far this year, they're not importing a whole lot of commodities. So obviously the COVID lockdowns and recession is having an effect there too. And we know, I mean, they're the hungry hippo in the room, right? If if they're going to eat up and buy all of our soybeans, we can be bullish commodities. And if they're not, like they haven't so far this calendar year, well, maybe we should be a little bearish still.
Well, and you bring up China, that's a big concern, I think, in the market trade, especially in the ag commodities. Their GDP growth, the weakest since before the pandemic last week. It's just what is going on with the Chinese economy is a pretty hefty concern across the market trade, DuWayne.
It's a huge concern. Like I said, they're the buyer. Now, I think it was a lot of the COVID lockdowns. I think we've all gotten so tired of hearing COVID lockdowns that, especially in this country, that when it happened in China, we kind of just pushed it aside. It's not a big deal. And yes, they still eat, but they don't go out to the restaurants and eat and have the little bit extra waste, right, that gets thrown away. So it is still bad when they have COVID lockdowns there. Now, a couple of weeks ago, they said, we're done with lockdowns. And then, of course, about 5 days later, now we got to start again. So it's something to keep an eye on there. It's a big deal, and their economy is a big deal. And there's also some tensions over the weekend about Taiwan, and that's something to keep an eye on. We can start to rally the bean market here, thinking we need a weather premium. But if China's going to start a new trade war with us, well, then guess what? They're not going to buy a lot of beans from us. So, man, it's going to be tough if you can't tell in the short term. This market's going to stay pretty violent. So maybe, watch the technicals, watch the overbought, oversold conditions, and trade accordingly.
Let's talk livestock, DuWayne, before we run out of time today. Hog market looking strong again here to start the week. Cutouts looking solid again. This hog market, I've been curious. I've been talking about this, wanting to see what the August contract would do with July coming off the board. And it appears, at least today, trying to make a run up to where that August level was.
Yeah, it sure is, isn't it? And I think you nailed it with the cutouts. Seasonally, we're not supposed to rally this time of year. We're supposed to go lower, and the market seems like we're going to do a counter-seasonal rally here. Cutouts are strong. Domestic demand is strong. China's not buying a lot of pork, obviously. So I think it's hard to imagine us doing some sort of crazy run above 115 to 120. But futures are rallying, and the heat maybe has a little bit something to do, and not as much in the hogs as it is in cattle, but that should continue to keep the weights down a little bit anyway, or put some more pressure, which means less production. So, and it's not like corn got that cheap, so we're want to move the hogs as quickly as possible. But just say I'm impressed with this hog market and watching the cash and cutouts, and as long as they rally, I can't be bearish.
And I mentioned, I mixed up there. I said where the August was. I meant the July. I think you knew where I was going with that. Do you think this is a spot to get into this hog market, maybe at least lock at a floor with the way it's been rallying, DuWayne?
Boy, it's a good question. If you've got some near-term hogs coming in, I'd say yes. Look at some short-term put options, some LRP insurance type. And even into the winter months, there maybe I'm not that bearish, but there I would do something that keeps the upside open, because when we start to talk the cattle market, really curious if we're setting up for a real bullish run here in this cattle market with less inventory coming down the line soon.
And that's a great point you make, because I was going to segue to cattle. You mentioned the heat too. I think that's a factor. This cattle market, to me, feels like it's just been bubbling under the surface here, waiting for inventory to kind of contract, to your point, before it makes a run to the upside again.
Yeah, I think that's what we're setting up to do here. I mean, last week, maybe the fat cash market was down a little bit, but that shouldn't have shocked anyone. When you see the 6 to 10 and the 8 to 14 and the hot temps right across feedlot country. Yes, it's not hot everywhere, but main feedlot country, to me, it was. That cash market, I think, was lower because you had more feedlot managers saying, yeah, I'm just going to go ahead and sell these critters now before it gets too hot and I have some death loss, right? So I think that's why you had a little bit lower market there. But boy, choice box beef above 270 again at midday here. So demand is really great. I think that cash market bounces back because the Packers are going to need them. We had a big kill last week, and it seems like those numbers are still there, but we keep waiting for this pullback in inventory, which we've been broadcasting and talking about for almost a year. I think it's coming. I think it's coming this fall. Luckily, I have been one that has been saying it's just going to be later than normal. So I do think it's coming, and Packers, I think, are pretty short bought and want to buy it. But the real big thing in this cattle market this summer has been the lighter weights, the light air carcass weights. That happens when you have really high feed cost. And then when you have really high temps, they just aren't going to put the weight on like you'd like them to. I mean, it's still amazing genetics and amazing feed out there, but they're just not the big heavy critters we used to have. So that means just less product. So I'm really bullish this cattle market, which is odd for me to be that way if I'm talking recession and everything else. Can we really rally the livestock market into recession? But I think we're going to.
Well, and there's a lot of things to watch and consider. We could sit and speculate what a rally could look like, but we don't need to do that today. DuWayne, before we run out of time, any final thoughts you have for us on the show?
No, I think we wrapped it up really well. Let's see how those crop conditions are this afternoon. Don't be shocked if it doesn't drop hard. Maybe only a 1% drop, but that's pretty seasonal tendency. A lot of rain in the Eastern Corn Belt. You might see some states actually improve over there.
Well, DuWayne, if folks need some marketing advice, I know they can reach out to you at Bolt Marketing very easily. How can they do that?
Yeah, just call us here directly, 605-448-2365, or they can always check us out online at boltmarketingllc.com.
With that, DuWayne Bosse of Bolt Marketing, always appreciate the time, sir. Thanks for joining us on a Monday, and have a great week. We'll talk to you again soon.